We're continuing with our coverage at the BMO Metals and Mining Conference. Right now I have the chief of Randgold with me, Mark Bristow. Mark, good to be reunited with you.
Thank you.
So last time we saw each other was in San Francisco back in November. And you were telling me how the company didn't really feel the crunch of the lower gold price at the time, and you managed to use the lower gold prices to your advantage. Here we are, start of 2014, gold managed to rally a bit. Has that strategy since changed?
No. We allocate capital at $1,000. We use $1,000 long-term gold price to calculate reserves, and that's been good for us. We have no intention of changing. If anything, we've used this opportunity to really tighten up on our business, because no matter how you try and be tight and keep to the discipline of $1,000, when the gold price goes up to 1,900 as it did, you always build fat in your business. So we've been carving that out.
So fourth quarter results now stellar.
Yeah.
What's the plan for 2014?
We've always run our objective is to really be a sustainably profitable gold company. We don't really focus on producing gold for the sake of producing gold. We want to make profits and deliver value for our stakeholders, whether they're shareholders or communities in which we invest, the companies, communities around our mines, or the governments of the host countries. And we really worked hard at building that on that vision, and we now have a solid 5-year visibility in our business. 2014 is going to be substantially better than 2013. 2013 was a year of records. We brought in Kibali ahead of schedule on budget. We're going to deliver the next phase of Kibali 2014, and we're talking about a 24 to 30% growth in production and substantially lower costs.
Right, so on the cost part, how much is it costing right now to mine an ounce of gold?
We finished the year 2013 at just over $700 total cash costs, and the quarter at $605, and we're forecasting on a group basis $650 to $700, so another $50 lower.
How do you keep it lower, Mark?
Grade is king.
Grade is king, okay. Mark, is it me or the African miners seem to have had an easier year than their North American and South American counterparts, despite the strikes, despite the political issues? What's the key here?
No, I think there's a very real shift from what I call infrastructurally endowed countries to infrastructurally challenged countries. Because why? Because all the easy gold deposits have been mined, and they're much more difficult to find, and there's an equal amount of risk. People think like Randgold, we're in Mali and Ivory Coast, DRC, we got full of risk. But if you look back 10 years and you look at the value created in the gold industry, we've probably created more than most. And so you've got to ask yourself, where's the risk when you invest in gold? And most of it is in management. How do you manage it? Because there's risk in Nevada and there's risk in DRC. It's just different. It takes 10 years to permit a mine in Nevada. It takes us 12 months, 24 months. We do the same permitting. But it's just that people in Africa and emerging markets want the capital. They're friendly towards the capital. Whereas, miners in the first world or in the developed world, they come very far down in the pecking order of, what's acceptable socially.
Are you looking for any acquisitions this year?
We always, if we could find another motto, we'd certainly have a crack at it. But, there's not a lot of value out there, and I think that's the frustration, despite the drop in the gold price and all the stress that you hear in this conference. There's not a lot of value in the market.
Mark, I know in the past you've told me you're not a gold bull. And that's interesting coming from a mining CEO, because most other ones will tell me, well, in this business you kind of have to be, but you have a different philosophy here.
Yeah, I think a lot of people into the gold business because they've got, and the reason they're bulls is because they have to assume the gold price is going up to be able to deliver on their plans and deliver value. We've always said we want to be profitable, so that's our primary focus. And gold is a great business if you focus on profits. And that means you've got to focus on world-class assets, high-value assets, and not just producing a bar of gold. And the exciting thing is that, certainly if you listen to all the presentations here at BMO, everyone seems to have got it. My point is that if we as an industry had got it 4 or 5 years ago, gold price would be a lot higher because we would have produced less gold at a bigger margin. Because we tend to be our own worst enemy in the gold industry, in that we produce gold even if we're making a loss. And that doesn't make a heap of sense to anyone. So I think it's good to focus on, the basic fundamentals of when you wake up and try and run a business, you should try and make sure that the revenue exceeds the costs, and then you have a profitable business.
Final question, Mark. I know you have many presentations to give. Do you find there's a change in sentiment this year compared to last year's conference?
I think for me, I was, it's been a surprise a bit to see the demand as it is, and certainly there was a very negative, and still is a negative sentiment towards the equities and the companies, but there's a realization that gold is a genuine and desirable instrument within the global economic framework. And that we as miners have, if you focus in developing assets that are not marginal, you can make very good money. And it's a fantastic commodity for emerging markets because it doesn't require a lot of infrastructure. It's very high value. It really impacts an early stage emerging markets balance sheet and foreign earnings and all that. And it's got so many good things to it. And you can make, as we've proved, even in Africa, you can make real profits.
Mark, thank you for stopping by.
Pleasure.
And thanks for watching our coverage from the BMO Metals and Mining Conference. We'll have more for you. In the meantime, email us comments or questions. Newsfeedback@kitco.com. Thanks for watching.